Good day, Doctor. We are from Group 13 and we will going to do the presentation for Financial Statement Analysis Evaluation Group Assignment. My name is Lee Jianwei with matrix number 279106. For my part, I will going to present about question 1, which is use the disaggregated measures of asset turnover to find out the effectiveness of management in generating sales from the company's operating asset for the selected companies. Okay, first of the disaggregated measures of asset turnover is account receivable turnover. The highest turnover is Borneo Oil Berhad and the lowest turnover is Pindai Kingdom. This meaning that the Borneo Oil Berhad have the most efficiency to collect their account receivable. So the second is average collection period. The highest collection period is Borneo Oil Berhad and the lowest collection period is BTM Resources. This meaning that BTM Resources can use the shortest time to collect their account receivable. The third one is inventory turnover. The highest turnover is Pindai Kingdom and the lowest turnover is BTM Resources. This meaning that Pindai Kingdom have the most efficiency to sell their stock. So the next one is average inventory days outstanding. The highest outstanding period is Borneo Oil Berhad and the lowest outstanding period is Pindai Kingdom. This meaning that Pindai Kingdom have the most efficiency to sell the stock. Next is account payable turnover. The highest turnover is Borneo Oil Berhad and the lowest turnover is Pindai Kingdom. This meaning that Borneo Oil Berhad has the most frequency to pay the debt. So the last one is average payable days outstanding. The highest outstanding period is Borneo Oil Berhad and the lowest outstanding period is Bright Packaging. This meaning that Bright Packaging has the most efficiency to clear the debt. So in conclusion, we can conclude that Pindai Kingdom has a good management in generating sales and the Borneo Oil has a worse management in generating sales. So that's all for my part. Thank you.
My name is Nivedita Selvarajan. My metric number is 281863. Now I am going to explain about question 2. Disaggregated measure of asset turnover affects a company's return on net operating asset is inventory turnover. Inventory turnover is a monetary ratio that indicates how usually a company's stock is offered at change at some stage in the given duration, and calculating inventory turnover can assist business in making better pricing, manufacturing, marketing, and purchasing new inventory decision. Midnight Kingdom has the highest turnover, which is 554.678 times, and BTM Resources has the lowest turnover, which is 2.1097 times. Midnight Kingdom has the highest efficiency in selling their stock, while BTM Resources has the lowest.
Good day, Doctor. My name is Wang Wenqi with metric number 278994. So today I would like to evaluate the credit analysis of a select company and discuss the advantage of each ratio related to the credit analysis. So first, credit analysis is one of the financial analysis and is used to assess the riskiness of debt instruments that issued by the company, which can also determine the whole capacity to fulfill its commitment. So the credit analysis is very important for banks, investors, and other external funders, and it will be estimated by using the operating liquidity analysis and solvency ratio. Operating liquidity analysis include many measurements, which include the current ratio, account receivable turnover, quick ratio, and others. And they are used to measure the company ability to meet their current liability. First, current ratio will assess a company's capacity to settle its short-term debt, which is within 1 year. And it is easy to calculate as it only to find the total of current assets divided by the total of current liability. It will help to determine the company cash ratio, thereby help the external investor to estimate the company's short-term financial health. And with this ratio, the investor can see how well the company can use its current assets to pay down its current liability within a year. So looking at this example, we can see that the average current ratio for Bentai, Boston, and Boxpacks were lower than 1 during the 7 years, which means that they were able to cover each 1 ringgit of the current liability with less than 1 ringgit of the current asset. So they are less liquidity due to a lower current ratio compared to another company. Second is the account receivable turnover. So account receivable turnover measures how the frequently a firm collects its account receivable on a yearly basis, and it is used to assess a company's capacity to properly recover its credit that provided to the customer. And a higher account receivable turnover ratio may reflect how a company collects its payment. And let us look to the example. It shows that the Borneo Oil Berhad has the highest average of the account receivable turnover, which around 18.8735 over the 7 years period compared to another company. So it means that there are about 18.8735 times for Borneo to collect its account receivable for each year. So it shows that it is the most liquidity due to its higher account receivable turnover ratio. Last is the quick ratio. So quick ratio is similar to the current ratio. It is used to analyze the balance sheet data to determine if a company's short-term assets are able to ensure its short-term liability. However, the inventory is not included in the formula as it is often slow movement and it is more challenging to dispose of quickly than the other current assets. Therefore, its formula is shown in this table. And when we're looking on this example, it shows that the bread baking has a higher average ratio with 6.7853 times during the year. And it shows that the bread baking would cover each 1 ringgit of the current liability by 6 ringgit of the liquid assets over the year. So the bread baking is the most liquid among the all select companies. So that's all for me. Thank you. And now I will pass to another presenter.
Good day, Doctor. I am Illustrator Chen, now metric 278169. Now I will continue to present the question 3. Solvency ratio had divided into two parts, which is capital analysis ratio and earning coverage. Capital structure ratio. Investors can examine what would happen to their investment in the worst case scenario using the capital structure ratio. One of the ratios measured in capital structure ratio is total debt to total capital ratio. Total debt to total capital ratio analyzes the total amount of outstanding company debts as a percentage of the firm's total capitalization. It helps investors to understand a range of information about the business, including capital structure and financial solvency. As table shown above, we can see that Hyundai Kindle has the largest average value, which is 1.4718 in average 7 years, indicate that the company debt constitutes 147.18% of the capital structure. Therefore, it is less dangerous to borrow money from or invest in the companies. A special company which is BPP has zero value for all observed years because the company does not have any long-term debt or short-term debt in these years. Earning coverage. Earning coverage is a metric used to assess a business' capacity to pay off debt and fulfill its financial commitments. Only one ratio is computed for earning coverage, which is time interest earned. Time interest earned is used to measure a company's ability to service debt based on current operating income. The main purpose is used to estimate a company's probability of default. Lenders and borrowers use it to assess a company's debt capability. From table show, we can see that BPP's income is 521.15x times greater than its annual interest expenses, which means BPP can afford to meet additional interest expenses. This makes BPP company less risky, therefore, the bank should not have any issue lending to them. That's all for question 3. Thank you.
My name is Nur Fadila Eliana binti Arifin, metric number 284478. I will presenting question number 4. What are the factors affecting the selected company earning per share and price to earning ratio? The first factor that affected EPS and PE ratio are by the number of shareholders. If the company has more directors and earn large profit, it will distribute more dividend to shareholders and raise the share due to demanding. Based on the table state, it shows that Volumetric Holding Berhad has the highest average board size among other companies, with amount 9.5714, and its EPS average is 0.0516 and EP average is 17.6 411, while the company that has the lowest average board size is Borneo Oil Berhad with amount 5.2857. Its EPS average is 0.004 and PE average is 1.8587. It shows that Biomass Holding Berhad is utilizing their shareholder funds more efficiently than other selected companies. The second factor that affected are by the company market value. Market value is one of the company's stock which can be influenced by earning per share. Based on the data stated, it shows that Boston Holding Berhad has the highest average of market value with amount 3408.62. Its EPS average is negative 0.0876 and its PE average is 47.0992 respectively, while the lowest average market value is from the BTM resource with amount 25.89. Its EPS average is negative 0.0221 and its PE average is negative 0.2836. It shows that the selected company market price keeping rise and fall by year due to demanding for these 7 years. Third factor are by company size. Company size has its own role in calculating EPS and PE ratio to measure the effectiveness of the company. Based on the data stated, it shows that Boston Holding Berhad has the highest average company size with amount 17,310,457.14 and its EPS is negative 0.0876 and its PE average is 47.0992, while BTM Resources company has the lowest average company size with amount 10.5873. Its EPS average is negative 0.0221 and its PE ratio average is negative 0.2836. It shows that selected company size, if increased, will affect the earning per share and price to share ratio fall during these 7 years. Last factor are by company tangibility. Based on the data stated, it shows that BSL Corporation has the highest average tangibility with amount 0.5203. Its EPS average is 0.0107 and its PE average is 5.0958, while the lowest average tangibility with amount of 0.0044 is from Pintai Kingdom Corporation Berhad. Its EPS average is negative 0.0316 and its PE average is 2.8082 respectively. It shows that only a few selected company has higher capacity to protect their debt and get closer to its profit during these 7 years. So that's all from us. Thank you for listening.